This is Money Stories.
Brought to you by Amy and Ben from In Financial Services.
Today we're joined by Andrew Walker, real estate agent and director of Street Property Newcastle. Today Andrew will share his money story and the changes that he's seen growing up in Newcastle.
All right, welcome back to another episode of Money Stories. Today we're joined by myself, Ben, and Janine.
Hi.
And today we're joined by someone who's seen the Newcastle property market evolve from every angle, from junior residential sales back in the 80s to now leading one of the region's most respected agencies. Andrew Walker, from the director of Street Property.
Good afternoon.
Good
Hello.
afternoon. So Andrew's been a driving force in real estate across Newcastle, Lake Macquarie and Port Stephens for nearly 4 decades. From landmark sales to major residential developments, Andrew has built a career on knowledge, consistency, and always putting the client first. So today we're not just talking about property, but we're talking about Andrew's personal money story and how he approached money in his early career and what he's learnt from the ups and downs of the property world. So Andrew, do you want to share with us a bit about yourself to begin with?
Yeah, sure. So I'm a born and bred Novocastrian. Did all my schooling here in Newcastle. My parents built a home in Merriweather in the early 60s. And until recently, Mum still lived there. She's just moved into care. I myself, when I left school, could have gone to university in Sydney, but my father said, look, if I sent you down there, you'll last 12 months and you'll fail. All you want to do is go out and play. He was correct. And so I was forced to get a position in the New South Wales government with the public trustee.
Yeah. Okay.
Did that for 3 to 4 years. Public service didn't really fit me. Went out and tried sales for about 12 or 14 months, then a role with NIB Health Funds as a rep for 3 years, and then secured a position with Street Real Estate. I knew Max and Terry Street through Merriweather Golf Club. Finished my uni degree and thought, well, I don't want to be a school teacher, so I might start doing the real estate course at TAFE, which I did. Last week, 24th of May, I clocked up 40 years at Street Property. So
A long time with the one place, isn't it?
Yeah.
yeah, they, I mean, Max and Terry were particularly good to me, and they gave me the opportunity, and I was, I was loyal and felt loyal. I had opportunity to move to other agencies, but they weren't just my bosses, they were friends. We'd play golf together and socialise. So for me, it was an easy fit. And the sort of work that Street Real Estate does is very diverse, from second-hand housing through to selling capital assets and development sites and obviously doing project marketing.
Yeah.
And that really stemmed from Terry, who, if you look around Newcastle in the 70s, there's a lot of 3-storey walk-up start units, blocks, with the car parking on the ground floor that Lend-Lease developed all through Newcastle and Lake Macquarie. And at the time, Terry was the agent in Newcastle that sourced the sites for them. And then his business sold all the units off the plan to the extent where Lend-Lease did the same thing in Wollongong and asked Terry to open an office there. And Terry even went to Papua New Guinea for a while with them to help them there too. So, I mean, it's interesting and it's challenging and it's diverse. So, that ticked a lot of things for me.
Yeah, cool. Let's go back to when you were a kid and when you were like sort of coming up and growing up. When did you sort of realise that you might go into property? I know you said that wasn't probably till a bit later, but what do you think shaped you as a kid, and what brought you towards going?
What do you
down
think that you
path?
stumbled into it and then just you got into it and then you're like, hey, I like this, and so I'll continue on with it?
Yeah, it was. It wasn't something I stumbled into.
Yeah.
I mean, I think in the era that I grew up in, what happened is people purchased a block of land or they purchased a home, and that's where they finished. And people down the street, you had Auntie Joan and Uncle Rob and everybody else. But the thing was, they weren't related. But they'd lived in the same street as you and your parents for 25, 30 years. And so there wasn't a lot of migration, if you like.
Yeah.
And I think that that's why people paid off their mortgages and were relieved when that happened. And I mean, my mum and dad are a very good example of that. They purchased a block of land up in Merriweather Heights at the time, which is Merriweather. Built a home. It's still there, and the effluxion of time has meant that that £1,200 block of land and whatever it cost to build the house is probably, I would think, worth $3 million now. It's a weatherboard home because mine's subsidence at the time, and when it gets sold, someone will bulldoze it and build new. So people go, you've got a $3 million asset, but Mum's 94.
So that's actually interesting. So what would have been the first property you sold, and what price would have that been at that time?
Well, I suppose interesting, there was the first property I purchased.
Okay.
So the interesting thing when I went and worked at the public trustee, of course, part of the public trustee with the estates is the sale of homes. So I was exposed to that. But the other thing, if you're a public servant, and guys in the public trustee obviously were buying homes for themselves to live in, if you were a public servant and provided you stayed in the public service, well, if you did, you could borrow money, and it was the Northern Cooperative Building Society at the time. And you had an interest rate that was 0.5% lower than the standard rate because you're a public servant. The minute you left, it went back to the normal rate.
Yeah.
And so, armed with that, I purchased a home. I still remember, on the corner of Dayton Jefferson Street. The fellow that owned it was a rental. He thought he'd do it up to sell it, so he went down to the disposal store at Hamilton and bought 8 44-gallon drums of Orchie yellow paint, and that's the colour of the house I bought. And I paid $26,500 for it.
Yeah, wow.
Okay.
The fellow told me I had to pay $27,000 because he'd promised the lady next door that he'd replace the dividing fence. I told him I didn't even have $26,501. I'd do the fence. So we shook on that, and that was the first place I purchased.
And what do you think that would be worth now? Is it still there?
No, I sold it about four years after I bought it to people that finished up putting 4 villas on it.
Right, okay.
I think I got 67,000 or 67 and a half, which was, at that time I thought I could retire. What would it be worth today? Yeah, probably just under $1 million.
Yeah.
It'd be
nice.
that sort of thing.
Yep.
Yeah.
Yep.
But I mean, that's, you're talking 40, that's 46, 47 years ago.
Yeah.
Yeah.
And there are people, you look at the escalation in value down on John Parade in Merriweather. I remember selling a property, I can remember selling a couple of properties there for $240,000 way back, but I can remember selling a property there with Sonia Walkham for $2.4 million, I reckon, being the last, call it 10 or 12 years. And I mean, it's resold for $8.5 million. So, I mean, that's a multiplier of 3.5,
Yeah.
which is a huge amount of money,
Yep.
Yeah.
given the value. So, I mean, the other thing too, of course, as we all know, is $1 back in those days, its buying power.
Exactly.
is
Buys a lot more.
It's probably, you'd be lucky if it's 50 cents now in real terms.
Yeah.
So
Yeah.
you've got to take all that into account as well.
Yeah.
And off the back of that purchase and then the sale, did you reinvest that money back into property? Or?
Yeah, I did. So I did that before I started with Street. Bought a property. I bought an investment, bought a little investment property, but to develop.
Yeah.
So I had a turn of that. Got 3 villas built on that, and then from there, obviously, own home and the like, and follow the history there. So, knowing I was coming here today, I was trying to work out how many properties I'd actually owned in my time.
Yeah.
And it's over 40.
Yeah, wow.
Mind you, I don't have 40 now.
Yeah. And of those 40, what were sort of like the best performers, or what did you have the most fun with? Did you like doing the developments, or?
It's a good question. I did a couple of developments. I did one on my own, and then there was a cluster of 6 I did with 2 other people. I worked out development wasn't for me. Obviously, you've got to raise a lot of money.
Yeah.
You're relying on other people.
Yeah.
And market forces can swallow you up.
Yeah. Yeah.
And so that didn't fit me. Obviously, if you buy your principal residence and live in it, and you're prepared to move around, you're not paying any capital gains tax.
Yeah.
And from that perspective, also you're providing a far nicer lifestyle for your family. And so I enjoyed that. I renovated and extended a home in Merriweather in the early 90s. I bought a block of land out at Whitebridge, and we built a beautiful home there.
Yeah.
So I've been through all of those. But I suppose at the end of the day, and again with Terry Street, you learn lessons from the people that are around you. Terry was involved in development, and he suggested with a couple of the projects we did that maybe I might be interested in buying something off the plan. He said, I think they'll go up. Why don't you have a turn? I said, yeah, well, the only problem is I don't have a deposit. He said, I'll cover that. So you get a taste of it. That was development in Derby Street called the Wool Stores.
Yeah. Okay.
And that was successful. I sold that. There was a profit there. That paid for a swimming pool in the new home.
Yeah.
Which was pretty exciting for everybody.
Yeah.
And so I've dabbled and delved in off the plan.
Yeah.
I suppose. And this is me as a buyer. I always think when you go in and do off the plan, the golden rule is you must always be able to settle. Otherwise, you're inviting great sadness in your life,
risk.
and it could be a 10% deposit walk away, or the developer chase you for a shortfall if it happens.
Yeah.
So you've got to be able to settle. But the thing is that your outlay is 10% deposit, stamp duty.
Yeah.
You can sell before settlement. And based on the money out, you can make 100%.
Yeah. Yeah.
On your out.
Yeah.
Which is.
So you just have to be willing to take that risk, don't you? Because
And
it's one of those things you just don't know.
And I think there are ways you can safeguard yourself.
Yeah.
As well. But I mean, that's just one strand. And it's a strand that has been very good to me. I mean, the other thing too, I've owned a couple of commercial buildings, and got lucky with one where it was purchased maybe to expand street real estate next door.
Yeah.
And people came along and off market through an agent approached me because they wanted offices down where the new law courts were going to be. And they offered me double.
Yeah.
But they were going to own or occupy.
Mm.
And it's very interesting when you're an agent and an owner of a building and they say, well, we'll give you double in real terms, and you say, I'll just go home and tell my wife and see what she has to say. And I'm thinking to myself, I know exactly what I'm saying. And let's get this over and done with.
Yeah.
But so I've been fortunate. I mean, look, I've had square results as well, and I mean,
And have you always bought in Newcastle?
Yeah.
And is that just because that's the area that you know, and so you're comfortable with the research and the data?
I've always bought in the in the area I know.
Yep.
And that's as far as the region.
Yep.
And also the type of real estate. I mean, there's been opportunities to buy, I suppose, infrastructure, for example. So telecommunication towers and things on land with very, very good returns. But I didn't really understand it. And at the end of the day, my view was, well, it's only ever going to be a return-based thing. And if the telecommunications becomes obsolete, I've got a tower with a concrete slab that is worth nothing except for roosting rights for whatever bird parks itself there. So and again, I know plenty of people who will only deal in retail and comfortable in commercial and comfortable in industrial. So it's whatever you're comfortable with.
Yeah.
That does make sense.
And so back to your off-the-plan purchases, as a buyer, what sort of key things did you look for to make sure that those buyers were going to be like not risky or more profitable for you?
I suppose the steps through, and I mean, whether you're purchasing to roll it over, so if you're purchasing for profit, I suppose if you're purchasing to live there, if you're purchasing to invest, I think there are critical things. So the things I've always liked is a development that can't easily be replicated.
Yeah.
Because that in itself, doesn't necessarily make it unique.
Yeah.
But it's not going to be, say, like Harry Triggleboff and Meriton, who have a standard template and just pop it on a piece of land that fits it. It's got to be a development that I think will appeal to owner-occupiers. Yep. So one, owner-occupiers want to live there, but two, if you're buying it as an investment, then there's going to be competition to lease it.
Yeah.
There's not as much rental stock in it.
Yeah.
Tenants want to live there, and optimistically one day when you go to sell it, maybe it's an owner-occupier that buys it rather than an investor. And as we know, owner-occupiers always pay more because it's a heart purchase. Yeah. It's not a wallet purchase. Yeah. I'm also very mindful, and we're going to see, and we're seeing more of it now. I don't, as much as we know there's a requirement and a need for affordable housing, I think it's okay for affordable housing to be created in developments as long as it's not the one I'm in. I think that there are impacts to developments that will have a mix of affordable, social, and normal housing. There are some in Newcastle where there are challenges, particularly around the car parking, because a lot of the affordable and social houses has no car parking designated.
Yep.
So they are tending to just park where there's a spot, and that's causing acrimony. And also too, always mindful of who the developer is, so who the architect is, and who the builder is, because they're all things that people will be drawn towards at some stage in the future if you're going to turn it over.
Yeah.
And if you're going to live there, you want something that's got a reputation for being, excellent with finish, defects, retention,
Yeah.
and the like.
And so you think you'll just continue on that path of looking for the off-the-plan purchases as they come along and continue to buy that way?
Yes, I will. So I've got 3 sons, and they're following a similar path.
Yeah.
I've been, there's other advantages with off the plan, but with the 3 sons, obviously, and with the first home buyers, I can't understand why first home buyers don't take free money. In New South Wales, if you're a first home buyer, whether you buy brand new or pre-existing, your stamp duty is waived. And that's fantastic. I mean, it's what, $28,000, $30,000, $32,000 free hit. However, the first property you buy is never going to be the last one that you're going to live in.
No.
And so the federal government will provide, in order to stimulate the building industry, first home buyers grant of $10,000. I mean, it's a cheque you get at settlement. You don't have to put it against your mortgage. You can spend it any way you like. But the home has to be brand new. And invariably, although even now that's priced itself out, Gilston Heights and places like that, people will be buying houses out there to take advantage of that. And they've probably priced themselves a little bit away from that now, so you might have to go further afield for the brand new 3 or 4 bedroom home. But a 1 bedroom unit you can still buy in Newcastle for under $600. You get free stamp duty. You check for $10,000. You can live in it for 6 months of the first 12. That's all you need to do. If it's gone up in value off the plan, which invariably they do creep, and then you have a chance to go, well, how good's that? I've taken something for nothing. I've made some money, and now I'll go and
Decide what the
buy a
next step
house,
is.
or buy something else, or whatever. So I mean, there's and that particular grant from the federal government going back. I mean, I think during the financial crisis of 2008, 2010. I mean, I think the money from the federal government was $35,000 for first home buyers. Well, if you think about that, in a 12-month period, you've got to earn an extra $70,000 before tax to get that 35. I mean, it was an outrageous offer. And I mean, even in the last 4 or 5 years around COVID and the like, I think my middle son might have benefited. It might have been 21 or 22,000. That's a huge amount of money. So I think that, and off the plan obviously provides that. And I think you've got advantage. There's advantage in that. So look,
I suppose it's an easy in too, because it gives you the time to continue to save money while you're in the market, but you're not having to pay for it.
That's correct. And the other thing too, the state government's done to incentivise people, or not to penalise them if they're purchasing from plan and intend living there, is that you can defer the stamp duty. So if you exchange your contract, you can defer your stamp duty for 12 months on the basis of a declaration that you're going to own or occupy. So they're...
But hopefully if it's first home buyer, they don't have any anyway.
Well, the first home buyer is not a problem, but it's second and third and fourth home buyer, it's still there for you. And it allows you, as you've said, Janine, it does allow you to save and accumulate.
And I suppose the only thing off the back of that is you just have to be that little bit more, what would be the word, risk adverse, happy to go in on something where you can't have an unconditional approval to proceed with it, because you have to wait that time frame for the property to be ready to settle.
So I mean, you can come out with that horrible cliche, life is a risk, but we won't go down. Look, if you're purchasing from the plan, there are risks.
Yeah.
You can't get a finance approval because, as well, that's what you do for a living. The finance approval that only has a life of 60 or 90 days. The pre-approvals.
3 months. Yeah.
So you commit today and you exchange. You're locked in. It's unconditional. You can't be protection with finance clauses. And then what you do is you're hoping that 2 or 3 years down the track, that market conditions are such that money's able to be obtained no differently to the conditions when you purchased, or they might be more favourable.
Yeah.
The thing that, of course, people, you take a deep breath and think, I'm going to die here, is when they are less favourable.
Yeah.
So that's the first part of that. And obviously the second thing you are risking your 10% deposit. Again, you're playing with market conditions. I can say categorically that all the developments that I've been involved in, not every development, of the purchases, praised the agent and said that's unbelievable how much these have gone up. I've seen plenty of heartache stories where people have gone in and decided to have a turn and the market's changed, or the quality of the development is not there.
Yeah. Yeah.
And people are faced with, they've lost their 10% deposit. And that's heartbreaking.
Yeah.
For everybody. But again, as you say, that's part of the risk from the plan.
Yeah. Yeah.
Now, you've been around the Newcastle market for quite a while, and you mentioned back at the start that you've seen it sort of change a lot from people living in the same street their whole life to people moving around. So what are some of the biggest changes that you've seen around Newcastle?
Well, I suppose with Newcastle and market conditions, the good news is that when I first started in real estate, interest rates were 17 or 18%. Finance was not easy to get.
Yeah.
You certainly didn't have the width of finance providers. Obviously, I think what Keating opened up the market way back in the 80s, that helped everybody. I think the population is far more mobile now. And I also think too that people have realised that with your principal residence not being any profit there not being taxed, if you're moving around and improving the property you're living in, which is an improving value, what you're doing de facto is you're creating something that will support your super fund.
Yeah. Yeah.
Of course, I think it should be interesting with this new superannuation, the over $3 million unrealised capital gains that we're going to hit. That people are going to say, well, maybe I should be looking more and more about moving and moving the value of my own home because it's not being taxed and it's a superannuation substitute. The scary part there is if the government works that one out and says, well, maybe we should be looking at taxing capital gain on principal residence, which I think would see them out of government because that's everybody.
Yeah, that's right.
Yeah.
I mean, so people are far more mobile. I think a lot of people own more than one property.
Yeah.
Obviously, with the advent of superannuation, which is an 80s thing.
Yeah.
The thing with superannuation again is people could purchase property. It's far more stricter than it was, but there was that period where people, a lot of self-managed super funds and the like, have their own have property as part of their portfolio. I mean, Newcastle as a region, it's so dynamic now. everyone said once upon a time that we existed on the state dockyard and steelworks, two blue collar.
Yeah.
Neither of those exist.
Yeah.
But you look at Newcastle; it's a clean city. I mean, back in the day when the BHP still existed and you were selling property in Mayfield, the women that lived in Mayfield would tell you that they hung their washing out based on their husbands telling when the basic oxygen furnaces were going to open, because all the soot would come out. But if you went over to Mayfield and you wiped your hand along an external panel, your finger would be black. You can go over to Mayfield and do that now. That doesn't exist. Mayfield's clean. Mayfield West, Mayfield East. We've got a big university campus. It's spread from Callaghan into the inner city.
Yeah.
We've got a private university here, annexed with Nihon, the Japanese. The port, coal's enormous, and that's not going to change.
Yeah.
Well, not my lifetime. And the port's got a capacity because it's got, I think it's about 43% it operates at. So the capacity for the container terminal, which will happen, that'll occur. We've got an airport that is more than a regional airport now. People come from Chatswood and the Central Coast to fly out of Newcastle to connect because it's easier to get into the airport.
Yeah.
It's less expensive to leave your car.
Yeah.
It's not as difficult to get back through customs. I'm not sure we have customs. I think we just walk off.
Yeah.
They're all positive for Newcastle.
Yeah, look, it's and when you say Newcastle, we talk about Newcastle broadly, but of course, I should say Newcastle and
Hunter Valley
and Lake Macquarie.
Yeah.
Because it's all one. I mean, you look how Maitland's expanded, enormous. And then you go, up the valley. So, who would have thought, the housing around Lochinvar? It's staggering, when you think about that, and Greta and beyond. So there's been huge, there's been a huge transition.
Yeah.
People forget too that NIB health funds, head office is Newcastle. It's a Newcastle-based health fund. It was Newcastle Industrial Benefits. It was BHP's health fund back in the day. Public company, and it's enormous. McDonald Jones housing. That started off as Phil Jones and Bill McDonald. Frank Tickle and Cliff Prinzhorn, and I mean, they're building 40 or 50 houses a year. They build 5,000 now.
Yeah.
It's a lot, isn't it?
It's well, if you think of the homeowners warranty, if you're building 5,000 a year and the homeowner's warranty 6 years, at any given point in time, you've got 30,000 potential defects areas to look after. So you've got all those sorts of things, and you look at what Macquarie's done. You look at GWH and Hilton. They're big companies. They're all generated out of Newcastle, but of course, I remember when Jeff McCloy would compete with others for the little Department of Housing projects, and that was to build 4 villas. And look at where that's escalated to, and Hilton the same.
And so projecting that forward, what sort of changes do you see coming for Newcastle and Hunter Valley over the next decade or so?
It's interesting. You go, well, I'm not quite sure what's the next coastal area it's going to open up. I mean, around the harbour, the last of the government offerings is Honeysuckle HQ. And I think they're reasonably close now to awarding that. And that's a big deal because it's a couple of hectares of land, mixed use on the harbour, which will obviously have residential component, but retail, commercial, special use and the like. And then that's the harbour really closed up because the Throsby Creek's all been redeveloped in real terms as well.
Mm.
And of course, with Newcastle and Lake Macquarie, we've always got the challenge of height because of mine subsidence.
Yep.
And most people don't realise that Newcastle has the best buildings in Australia as far as structural integrity.
Mm.
People from out of Newcastle come in and they talk about Opal Tower and Mascot, and you go, well, in Newcastle you've got to comply to the Building Code of Australia. Once you've got over that, you then have to get the Mine Subsidence Board to approve it and stamp your plans.
Yep.
And then in 1989 we had an earthquake, and so in Newcastle we have to comply to the earthquake code. So there's 3 tiers there of approval. So sometimes the aesthetics of our buildings and delivery may not be what people are hoping for, but from a structural integrity perspective, they don't go anywhere.
Yeah. That's interesting.
Well, do we have time for a game?
Yeah, we'll well before we get to the game, we'll go to the game first. Yeah. Okay. So we've got a game and it's called One Property, One Lesson. So it's about a lesson that you've learnt from a type of property that you've either purchased or been involved in or had anything to do with. So our first question or our first example is the biggest development site you've worked on and what you've learnt from that.
So the biggest development site I've ever sold, I sold in conjunction with Savills.
Yep.
And we sold it for the New South Wales State Government, but they were acting for the Darkinjung Aboriginal Land Council down on the Central Coast. It was a north entrance site, and Mirvac were the purchaser. Magenta Shores, if you're a golfer, or that's the site that we sold. And the estimates of value, and the Land Council had an offer, which they almost took, but they got the government involved. They got an offer of $12.5 million. Almost took it. We took it to market, and we sold for 42.
Oh wow,
That's a big difference.
That's a huge jump.
So that's from a selling property, and I've had some interesting sales. I sold the John Darling disused mine for BHP. Sold that. Sold Burwood Colliery, the old site there. Sold that as well.
Yeah.
They're interesting sales because of the people that you're dealing with, and the bits and pieces. I suppose from a residential project, development project, probably the most interesting, the one I suppose gives me the greatest joy, would be Horizon on the Harbour. It's a beautiful building. The architectural collaboration was outrageously good.
Yeah.
And through circumstances, went through COVID and things like that, every single person that purchased in there, whether they bought a 1-bedroom or whether they bought a penthouse, the increase in value for every single person that purchased is outrageous.
Yeah.
Just beyond anything I could ever imagine, and I think that they could as well. So, I mean, it's always nice when that occurs, but the quality of the product that we represented was fabulous.
Yeah. You want to go with the second?
Yeah. Okay, so another question. One property sale that completely changed how you approach deals or clients?
So again, off the plan, there was an apartment that we sold, and the people weren't in a position where they could settle, and so it was on sold. and I knew the people well. And what I did was it had to get sold.
Yep.
And so everything was done properly, but there was a little piece of paperwork. It's when you change a price, you've got to write to the owners.
Yep.
And confirm that this is what's now happening, even though they'd given me an instruction. And the relationship went sour, and I got picked up on that. And so the lesson to be learnt there is whether it's someone who's a friend or whether it's someone you don't even know, the thing is that you've just got to make sure you dot all your I's and T's. I mean, it was at the time it was a powder keg thing for them. But what they did is they came back at me on that basis. So
that would have been tough.
Look, when it involves the potential for financial loss, yes, they didn't. There was no financial loss. There was no doubting they'd made a profit. But at the same time, it's got to be someone's fault.
Yeah.
And so if you can find a weakness, then that's where you head, and that's what happened.
Yeah. All right. And last one, have you ever had a property that looked like a good buy or looked like a bad buy, but turned out to be opposite?
I've sold a lot of property, and I've seen people purchase things that you go, I don't get it.
Yeah.
I'm not quite sure how that's going to work. There was a cluster of properties over in Tyres Hill. It was a deceased estate. We were acting for the public trustee, and it was all on one title. So it was a ratty old 2-story terrace on a corner, and then there was 3 little cottages, and they were brutal.
Yeah.
I don't think they had bathrooms. I'm not sure they had kitchens. And these people purchased it, and it was a young family, and I couldn't work out for the life of me what they were going to do. I thought they were all bulldoze and maybe go again. No, they got in with their friends and renovated one. They lived in it. Then they renovated the next, renovated the next, renovated the next. Then they subdivided them into their own titles, and they did extremely well.
Yeah.
And if you'd seen it before and after, you'd go, I just don't believe it. It's an interesting thing, the before and after. It just reminds me, when people are selling property and they bought something that's a rat palace, and then they turn it into the Disney castle. Invariably, they take all these photos of all the stages and everything else, and they have these albums. Now I'm showing my age. They have these albums of photos. These days, you'd have it on a USB stick. And they go, oh, look, Andrew, when you're promoting the property, can we put this on the table and you can sit the people down and show them what it was and what it is now? I said, the last thing you want people to see is what you had started with to what you got now. They're only looking at now.
Yeah.
They don't want to see all the bits and pieces, which is pretty funny, really. But
Yeah, cool. Well, that brings us to the end of our game. So to wrap up, I've got one final question for you. If you could summarize your money story or your story about money in either one word or one sentence, what would that look like?
My father was a very interesting fellow. He was a pretty serious sort of man. But I always remember he gave me a couple of pieces of advice. So the first piece of advice, I'm not sure whether he was giving me advice or telling me, what I should do. But he always said, whatever you do, look the part. People never realise how little you know till you open your mouth. So maybe he was telling me just to sit there and be quiet. But the other thing too is I always remember him saying, and this was before 7-Elevens, and supermarkets that open all hours. That I always remember him saying, if you're the first to get to work of a morning and you're the last to leave, you will always succeed. Because his view was that someone will need something from you, and they'll need it at a time where no one else is around, and so you will get the opportunity, and they'll never forget that. And that's happened to me on so many occasions. And my sons have taken that on board, particularly the youngest. When he started in Sydney at work, he always was mindful of that, and I actually mentioned it to him. And he's got to the stage where his bosses actively would set alarm clocks and try to beat him to work. But of course he didn't have any family, so he was always there. So I think if you're prepared to put the work in, and then you'll attract opportunity. And if you attract opportunity, then there's going to be success. And I mean that's financial. It's like if you're out looking for a property, don't wait for it. Don't wait for them to hit the newspapers. Go on early alerts, form relationships with agents. Let them know that if there's an off-market opportunity, you're happy to have a look, and you'll make a prompt decision. But the other thing too with that is, if you're out looking at things, then research, and purchasers now have so much access.
Yeah, they do.
To information. It's staggering, but there's a lot of misinformation as well. So I challenge some of the organisations that if you give the address of a property, they will give you an assessment of what they think the property's worth. Well, that doesn't make any sense at all because they haven't visited the property. So it's a 4-bedroom home with 2 bathrooms, a rumpus and a double garage. Is it a generous double garage? Is it a high clearance double garage? Is the rumpus, can it take a billiard table, or is it to take a chessboard? Are bedrooms 3 and 4, are they 3.5 by 3.5, or are they converted verandas? But they just throw it up and go, this is what we think it's worth. So I think proper research, you do proper research, you do well.
Yeah, cool. Righto. Well, thank you for coming in and sharing your money story. It's been it's been good, and been good to hear about Newcastle and where you see it going as well. So, thank you for coming in.
Thank you very much, Ben. Thank you,
so
Janine.
much.
Enjoyed it.
This is Money Stories.
Brought to you by Amy and Ben from In Financial Services.